Hey, good people. How are you? I hope you're having an amazing 2020 so far. I know it has been a minute since I recorded a video, but forgive me. I've had a bit of a long January, just getting into the swing of things. Um, but yeah, we're back, and I don't know if I should say it here, but I'm trying to commit to a weekly video. I will try my very level best, but I plan to do that. How's your 2020 going so far? It's February. Do a review of my finances as a whole. So there's for the business, we review the previous year, what we want to do in the coming year. But then I also do a personal one. So as the title of this video suggests, today I want to talk about what is your personal net worth. So I realized, and I thought maybe I could share it, that especially when you're running a business, when you're an entrepreneur, and the fact that all of us have, hustled here and there. And I know right now, like saving is a buzzword, investment is becoming a buzzword. Um, but as you're planning, as you're running all these things and hustling and running a business, I realize that for a lot of entrepreneurs, your business ends up taking priority in terms of your personal net worth as opposed to your personal finances. So we try and align our business and our personal finances and all of that. And in the end, there's a quote I was reading that said, sometimes we over invest in our business and not in ourselves. So what happens is that you might find after, let's say, 10 years of running a business, when you look at the business's balance sheet, the business is very successful. But when you look at the business owner or the entrepreneur, their balance sheet is horrible. Because all the money, everything they got in, which is something we do, we sacrifice a lot for our businesses. But when you look at your personal balance sheet, when you assess your own net worth, you realize you're struggling. And I find that very fascinating considering that we are all running businesses. Businesses are the number one investment, or when you're asking yourself how can you become wealthy, businesses are usually ranked the first because of the probability of making money fast, in terms of, okay, not fast, but you're able to, when you have a skill and you turn it into a business, you're able to make money faster than putting it in savings and letting someone else maybe call the shots on your behalf. But anyway, so I realize for a lot of us, we take sacrifices for our businesses. So we pump all our money. When we need to grow the business, we put money back into the business. But then 10 years later, the very reason we started the business was for us to be financially independent. And you find 10 years later, you're not. You've built a whole team, your director, all of that. And at some point, you will get paid dividends, just like everyone else in your business. But you personally are not wealthy. So one thing I became intentional about from last year is that at the beginning of every year, I sit down and review my personal finance. What I do actually is review all my investments and then assess what is my personal net worth as at the beginning, as of the first day of every new year. So I'll just walk you guys through my 2019, how I started my 2019 and my 2020. I'm not sure if I want to state the amount, but we shall see as we proceed. Yeah. So how do you calculate your personal net worth? So formula wise, it's usually you take your total assets and divide them by your total liabilities. But in a more practical way, what I do is I consider all my income streams. I consider how much money I have in the bank, and I consider all the assets. So I take all of that, and that is what I consider my total assets. And then I divide them by my liabilities, which means, do we owe anyone money? Do we have any loans? Do we have anything that is a liability that would remove money from you in any way? And divide that over by what you have or what is bringing in money. So this is my notebook. This is my finance book. It has, this is where I write down like all my financial goals and I keep track. So this is completely separate from business. So I'm going to be reading from that when you look at me turning away. So as of 2018, business was not fantastic. So Generally speaking, my net worth was below 50,000. Yeah, can you imagine? And how I calculated that is, these are the things that I consider, these are the things that apply to me. So number one is my business. Um, Number two is I invest in stocks in terms of the stock market. That's my second one. I looked at my social security. That's in terms of, I think NSSF for me. I looked at my liquidity, meaning how much money do I have in the pocket, in the bank, money I can access immediately. I looked at my insurance, my life insurance, and I also looked at my health insurance. I add my health insurance because if anything happened to me and I did not have health insurance and I had to take out money from all my other assets to fix my health, then it would affect my net worth. So I invest in health insurance as a way, it's an asset. If anything happens to me, my insurance can take care of it, and it won't drain my other assets. So when I did a review, so the reason that it was so low in 2019 is one, because um, business liquidity was low. That means we had not received a lot of payments. We had not done a lot of work. And also, my next biggest investment, which is usually stocks, had not performed very well. Meaning that I usually get a portfolio summary at the beginning of every year. You can request that from your stockbroker. And when I looked at it, they look at how much you've put into every stock, how much stock you have, how many counters like you invested in, what you put in versus what the expected share price would be, and then versus what it actually is at the end of the year. So when I did that for 2019, what I'd put in versus what the price was at the end of the year was lower. So that made me take a hit in my net worth in 2019. But that's 2019. Let's talk about 20. That's 2018. That's end of 2018. So 2019, I decided to do things a bit more differently. I had personal financial targets. I had targets for the business and I had targets for myself. And then I also like really sat down, and that's why this book exists. I sat down and asked myself, what am I investing for? What is my net worth for? Why am I working so hard? And I found my reason. So my top reason is that, one, I want to retire well. That is my number one reason for financial security. I do not want to be 75 years old and dependent on the government or struggling. So what I did is I looked at, there's also a formula. Let me just pull that out for you. Sorry, where is it? There's a formula that helps you calculate your retirement. Yes, and I got this. By the way, one of the smartest things I did while I was working is that I went and took Centonomy, personal finance. So that opened up. I knew what investments I wanted to make, but I felt like I was a bit blindsided because I did not know all the investments there were out there. They don't teach all of them, but they teach the basics of each. So if it's about land, how does land work? How does the stock market work? How does insurance work? So that opened my mind, and then I was able to decide, okay, these are the things that I want to invest in. So like I said, my main goal is security for my retirement. So you calculate that by, you look at the lifestyle cost per month, your lifestyle cost per month. So let's say for you to run your life and live comfortably right now, how much does that require? Multiply that by future inflation. Kenya, we've been playing around 6%. I think last year when we went down to about 4 point something. So I usually put it at a maximum of about 7%. And then I look at the investment period or the retirement date. So if I want to retire in 20 years, in 30 years, that's the number I put in. So you multiply your lifestyle cost, let's say it's 100,000, by future inflation, let's say at 7%, and then you put your investment period, which is, let's say I want to retire in 25 years. So that gives you how much money you need to retire. It means, like, when I calculated that for myself, it was coming to about, I need about 30 million minimum to retire well, meaning that by the time I want to go into retirement, that is the amount of money I will need to sustain the lifestyle that I have that considers inflation, and that will be able to take me for a good chunk of time after that. Okay? I did this first in 2018. That's like the first of 2019. So I was reviewing my 2018. And I did the same now this year, January 2020, reviewing my 2019. Like I said, at the beginning of last year, I decided to become more intentional about my personal finance and growing my net worth. So I had set goals for myself. And my goals, I could actually share them. So my goals were, one, I wanted to do savings. I've always struggled with savings in terms of like putting money away somewhere where I can see it. And at the same time, I had done the savings account with a bank because of security, but that didn't grow my money in any way. So I said, one, I needed to increase my savings. Two, so the basic thing was that I set a minimum target of money that I needed to save by the end of 2019, which was going to be the basis upon which I invest in 2020. So I'll just read to you. So as of the end of 2020, it had increased. The goal was I needed to have saved about just 100,000. And yeah, so when I reviewed it in 2020, sorry, I'm trying not to share all the numbers, but when I reviewed it in 2020, since I've already told you 2019, we had gone up by about 25%, which figure-wise is not huge, but in terms of investment strategy was huge for me, because it then showed me that whatever effort I put in 2019, whatever strategy I was using, the intentionality of it, that it also worked. So a major thing was that business-wise, by the time we started this year, that had also shot up. So we worked really hard in 2019. So that helped my net worth also. The reason I consider business as part of my net worth is because later on in life, when I do not have to run the business directly, it will still give me an income. So it's an asset. So that also shot up. In terms of stock market, I did put in a bit more money in the stock market last year, after I sat down and asked myself why the counters I had bought didn't perform so well. So that was not really my fault. I think the counters that I usually buy are good. And let me just say something about investment. My rule of thumb for investment is that invest in something that you're passionate about, something you will read about, something you're excited to do. So for example, I am not passionate about forex trading. So me investing in that, I would have to blindly give my money to someone else to do it for me, even though maybe it has high returns. I don't know, I've never tried. But that would mean I give someone else my money to do that for me, because again, I'm not going to take on the stress of learning about something I'm not passionate about. So I only invest in things that I'm passionate about, meaning I can read and I don't have to rely as much. As when it comes to the stock market, there's a lot of information and stockbrokers generate a lot of reports every month. I believe that a huge part of investment is your gut feeling as an investor. I don't know how wise that is, but it's what I use. So, and I base that on, if I'm passionate about this investment, I will read about it. I know the ins and outs of it. So even when I make an investment, because a big part of investment is that you could win or lose. So if you've not read up on it, and then you're not even operating with your gut feeling, when you lose money, then it kills your entire drive for investment, which is wrong, because investment is a win or lose type of thing. Anyway, so back to it. So stocks, last year I invested a bit more. If you've been following the stock market in Kenya, we enjoyed a really good year. We're looking forward to our dividends. Praise the Lord. So they did really well. They remained high. We closed at a high. So for the counters I purchased, I can actually say that all of them doubled from what we closed at 2018. So I'm very happy with that. I also invested more in my social security. I know there's a lot of different pension plans out there, but the reason that I choose to invest more, so there's what your employer, I'm my own employer, I'm an employee in my own business, so I pay an SSF for myself. But the reason that I do that, because I know there are some people who don't, is because one, it is tax-free. So if you're employed, I know there's the minimum contribution that you make that your employer matches that goes into your NSSF contribution. But in case you didn't know, 20,000 of it, of your salary that goes into 20,000 shillings, if you decide to put 20,000 shillings into your NSSF, it is tax-free. Meaning that if you're earning a salary of 50,000, 20,000 goes into NSSF. The other 30% is what the government taxes. They don't tax the full 50. So I thought that is a smarter way. And current pension plans, you do have to pay tax for them. I guess that's when you do remove money, when you profit from it. So I thought that's what works for me. So I go with that. So I'm trying to slowly over the years increase my to NSSF. So that's one way. And also when I'm removing it, it's going to be tax-free, which is another thing you have to think about. You could do it in a private one, put in 1,000,000 shillings, and then you still have to pay interest. You have to pay tax for it. So why not do the tax-free one with the government? So that also, our contributions increased. I also noticed when I got my statement, again, you can go and ask them for one, or I think you can do it on your phone. When I went and got it, I saw that they've included an interest section. So I think the government is investing our contributions to increase them, because again, NSF does have to take care of a lot of people. But anyway, I noticed that there's an interest section, and whatever investment we made in 2019 did get an interest. So I was happy with that. The other thing I decided to do is that I decided to go into money markets, because again, I said I struggle with savings. So I thought the best way for me to save is, again, in an investment vehicle that I like. Putting money in a bank or putting money, I don't know, in my bedroom in a piggy bank doesn't work for me. So I opened a money market with Saiton. And that also did well compared to other savings accounts and all of that I tried with. Again, the rule of thumb with this that I learned from Warren Buffett was save your money in somewhere where it is higher than the inflation rate. So if you're getting 7% at a bank, and we typically do about 6%, then it means your money is not going to earn much. So I went into Saiton. I did research on that also. It wasn't hype. I did research on that. I looked at what are the highest performing money markets, what's their historical performance. I looked at also what is the market saying about it, because again, where there is what we call, where there is smoke, there's a fire, or something like that. So I looked at that also. And also I looked at what is my risk appetite as an investor. So once I did that assessment, I decided to go the money market route, and I chose them to go with. So that was also good for me. It also motivated me a lot, because my savings literally, I think, 4 or 5 times increased. And also liquidity increased. So liquidity, I look at the salary that I get from my business. That's my liquidity. And then I also look at my life insurance. So I took out life insurance, influence from my mother. So I took out life insurance when I was in uni. And then I stopped at some point, because it wasn't, I realized I didn't understand it 100%, and I was therefore not motivated to keep doing it. But even at the time of closing it, there are still payouts that were to be made. So I'm still receiving payouts, I mean, off of my life insurance. So I might go back to it. I'm looking at insurance this year, and also my health insurance, like I said. So when I put all that together, when I assessed that at the end of 20, when I assessed at the beginning of 2020, my personal net worth had increased. I had not taken on a lot of liability last year, actually very minimal, and so my assets were sufficient, I guess. So my goal for 2020 with my personal net worth is to keep doing what I'm doing it and to amp it a bit more. And then also, like I said, my goal last year was to save a certain amount of money, which would then be the foundation of the investments I make this year. So with some of the investments that I made last year, I will take out money and put them into investments that will triple my net worth. So that is my plan for this year. So, and I'm also, my other plan that I implemented this year is with this channel to, as I share things that I'm passionate about, passionate about, hopefully in the future to also start monetizing this. So the other goal for me was to increase my income streams. So anyway, this video gave you some insight I hope it motivated you. And I'm really curious to, I look, you want to like start personal network, personal net worth challenge. I'm curious to know how many of you have done this or would do it, and what that would come to, what figure ish that would come to. Um, so yeah, I hope it also challenged you to, or challenges you to sit down and actually review and figure out what your personal net worth is. The reason I'm so passionate about this is because a lot of us say that we want to be wealthy, that we want to make money, that we want to be stable, but we don't put a figure to it. And even that figure, it's not, we don't calculate. When you say I want to be wealthy, we don't actually understand what that means in terms of a financial figure, in terms of a strategy to work towards it. We just know that, you know what, if I had 30 million in the bank, I'd be fine. But where's that 30 million coming from? And then also, I feel like we also create a cycle where we're always working to make money and not creating a strategy so that we can work and put this money to work for us so that we can be wealthy the way we say we want to be wealthy. So I hope this does challenge a lot of us to sit down and review and ask ourselves what our personal net worth is. And I hope it, the other thing I hope it does is it motivates you to create an investment strategy for yourself in terms of everything that you're doing, all the hustles, all of that. What are the three key things, if nothing else, that we're going to put our money into and that we're not going to touch for the next 30 years? Because one, when it comes to investment, time is your greatest friend or enemy. If you start now, you have 25 years to play with. Even though you do it at 5,000 a year, you have 25 years for that 5,000 to grow. If you decide you want to start it later on when it's geostable and what, then it means you'll have less time for your money to grow. So time is your best friend. Um, and also just have a strategy. So I hope you enjoyed this video. If you did, please like it. I know there's a lot of different thoughts happening with it, but I do hope to make more videos about money this year and just share my money story and things that I'm practically doing. So yeah, if you enjoyed this, if you like the channel, please subscribe. If you have any questions about personal net worth, or if you want to share some ideas in the comments about things that you're doing that are working for you, please let me know. I'm always ready to learn. If I've said anything in this video that is incorrect, please also share the correct information in the comment section. I am also just a human being learning as I go. So see you in the next one. I'm hoping will be next week. No, it will be next week. We're going to do better this year. The next video will be next week. Hopefully another interesting topic. Bye.